Yo, what's good? It's your bro Lo, and I'm bringing you guys another saucy trading video. Today, I'm gonna give you guys my model, how I approach the market, and how I get high risk to reward trades with a higher strike rate. Okay, so I'm giving you guys some sauce today. So go on in, smash that like button. And before we get right into the video, I just wanted to say that I am not a financial advisor. I am a regular guy, regular trader. Giving you guys non-financial advice. All right, so if you go smack an old lady for $2, I have no control over what you did. All right, I have no power over that. That's your financial decision. All right, so with all that being said, let's get right into the video. I hope you guys enjoyed your week, and hope you guys will enjoy the rest of it. Well, we'll get into that at the end of the video. So with this video, okay, so let's start off like this. My bad, guys, so for some reason my video had cut off. All right, so what we're gonna do first is we're gonna scroll up, and then I'm gonna do a little range basically so that I could keep your eyes focused on, right? Okay, let's do something like this, and then let's do that, and then down here, and then this right here. All right, okay, so let's say this is your range. All right, this is what we're gonna start off with. This is how I approach the market. This is how I start looking for setups and do my analysis. So first, if you guys go watch my other videos, I basically go over like how to figure out the draw, how to find the draw and liquidity, how to, if you watch what was it, the how to become elite with order flow, watch that video and then maybe come back to this one. But if you guys are already on this one, you just want to stick around, let's go and do that. I'm gonna just do a little breakdown. Okay, so we have this high, right? This is rated, okay, and we have these lows right here. This is our range that we're kind of working within right now. Above, you have your PDA rate metrics. So you start off from the breaker, FEG, order block, rejection block, buy side liquidity. Okay, same thing down here, sell side liquidity. Do the same thing from this breaker to this FEG to the rejection block, etc, etc. All right, so I mark up my PD arrays that way, and I figure out where the draw is currently. So let's say price is right here. Okay, so that's the first thing you want to do. I'm gonna go ahead and write this down for you guys real quick one more time. Where's price at? This is where I'm thinking of whenever I'm looking at the market. Okay, where's price at? Okay, relative to that time frame. Okay, what is it reaching for? Okay, you guys can annotate with ones, twos, you know, separate it. Okay, what's it reaching for? And then where are the stops? Okay, this is the basic three questions that I really ask myself whenever I'm trading. All right, these are the three things. Let me put this a little bit in, a little bit font a little bit higher so you guys can see it. Can you guys see this? I think, yeah, you guys can definitely see this. Okay, so with that being said, right, okay, so where is price at? Price is here. Okay, price is here in the range. It's basically close to the mean, the equilibrium of this high to this low. Basically what this high to this low is a dealing range that price is working inside. You only want to buy at discount and you want to sell at premium. Okay, so whenever I'm looking at this, I'm looking at where is price at and what is it reaching for. When I look at price here, the first thing that I'm thinking of what price may be reaching for on this time frame is, okay, maybe some FEG in here. Mark that out like that. Maybe an order block up here, right? And then maybe some type of liquidity that's resting, you know, could be something like this. Okay, something like this. And then there's liquidity up here, relative equal highs before we get inside of here. So I know it's reaching inside of here, you know what I'm saying? The breaker, I'm looking at what price is reaching for it, and then where are the stops, right? It might be stops above here. Okay, and that's what I'm looking at as well for price to potentially get up into. Okay, now same thing on this side. Let's say on this side, right, where's price at? Okay, if I see price moving like this, and then I see price do something like this and it starts coming down, if I see where's price at? Okay, what is it reaching for? Maybe some PD array, FEG, maybe below here. Okay, where are the stops? Could be some stops right here to be taken out. People are buying in this area right here. Let's say this area, right? Like break and retest, and it was some reactions around here, and then price went up, and then it started coming back down. Then I'm looking here to potentially take that out, okay, and then possibly move back up. All right, so this is basically the three things to make it, keep it simple. Those are the three things that I'm looking for. Okay, so whenever I have this, I wait for price to get to the stops, get to the objective. This is basically the objective up here, or wherever price is reaching for here. So let's say price goes up, okay, and this is my objective and this is my objective. Once price gets into here, then I have to wait and figure out what price is going to do. Now you might have a higher time frame bias to where there might be like FEG below here, or a BISI, some type of imbalance, or some liquidity down here, relative equal lows, whatever. You might be in a higher time frame sell model. You just want to understand where price is at and what is it reaching for, and what's the objective. And then once we get to that objective, wait to see what price does, and then find setups like that. All right, so when price is coming up into my PD array, okay, there might be liquidity here. I'm looking for the stops to be taken, okay, depending on what price did in this range, okay, whether if it was liquidity in here and then you had this, or up here. Okay, so once price takes this out, right, I could get into a sell limit depending on how I feel about the direction. If I'm confident, I could do a sell limit, or I could put in, it depends on you, you could put like half risk or half anything, and then put a position inside of here, and then you aim for what price might reach for after it leaves this. You reach for the draws on liquidity. Okay, all right, so basically this is what I look for. I look for price to come in, right, give me my model inside of this array, and then break down, and then to get to the draw on liquidity, the next draw. Okay, so I'm gonna give you guys two things that I look for in my model. So my model is stop hunt, basically market maker sell model, stop hunt, breaker structure. Okay, this is your basic Quasimodo that everybody looks at, and then a return to FEG, or order block, OTE, and then continue down. Okay, another one is when price does something like this. Okay, it breaks up, right, and you have a area right here, which is like a bullish order block that price comes back into. Okay, price comes back into, maybe it mitigated something up here while it was moving down, and then it came into here, right, then made a move up, and then once it breaks, I'm getting in right here. Okay, depending on what this high did, right, and then I'm entering here and then put my stops above, or you could put it above here depending on you, but here is another way that I use this right here, even before structure breaks. All right, so a lot of people, they call this a supply and demand flip. Okay, basically that's what that is. That's what people call it. If you know that term, then that's what it is. All right, so that's what I look at whenever price comes into these areas. Now, this is just my model. You might have your own model, but I'm giving you guys a foundation on what to work with, how to analyze, and then get high probable areas. Okay, so I'm gonna actually show you guys this on US30. Okay, my model, my plan. This is right off my plan. This the same things. You guys want to write this down, go ahead and write that down. I'm gonna clear that out real quick. All right, and then we're gonna go right to US30. All right, so looking at US30, right, let me give you guys a little bit of context, okay, because context is what matters. Price has a storyline. You want to understand the storyline and what price is doing and what's its objective. Okay, so actually let's keep this up, this right here. Let's keep that, and then we're gonna delete this up here. All right, so we're gonna keep that there. I'm gonna move it over to the right, and then I'm gonna keep this down, put this down a little bit. All right, boom, easy money. Okay, so the context on US30 is that price from this high. This is our range of opportunity from this high to this low. Okay, where is price at? Is here. Okay, it's in here, right? What is it reaching for, right? It could be reaching for these lows here, but right now the data that I'm gonna go over is inside of this price swing right here. Okay, so when price is here, right, I'm looking at what is reaching for a premium array, right? So we have this order block here, all right, and then we have an order block up here that price could reach for and play off of, all right. And then where are the stops? The stops was inside of here. Okay, and then we have our direction, which are these lows down here that price could potentially make its way back to. Okay, or it could just take out this high depending on what it does. So when price was moving from here, I'm looking at this high as well to potentially be taken out, you know what I mean? Because this high felt to create a lower low, which it possibly still can. It's just coming down into a discount maybe next week, and then to push back up. All right, but we know that it's liquidity resting all right here. Buyers were in this. All right, so now that we have that, all right, we're looking at this area. So let's look at this area real quick and scroll down to a lower time frame. So we know that this is our daily order block that we're working in within, and we see that price came up. Okay, came up here, and then we broke down. So we basically ran out the liquidity here. We went up and we took this out, right? We took out stops here, came into this daily order block, and then we broke down here and took out sell side liquidity. So this is what you call a dealing range. Okay, they knocked out both sides of the market. Currently they took out one here, buyers here, right, and people who are selling, and sellers here with sell stops, and people who are buying, right in here. Okay, so we cleared the board. Now this is our range of opportunity that we're working within, right here. So what I did was I marked out where's the stops. Okay, you see all this build up right here. Okay, this is just liquidity to be ran right here, and you know what's actually gonna be stops and buy side liquidity when you see what did price do inside of here. It really didn't do anything. Really didn't do anything but chop around, create relative equal highs. We're looking for that to be ran. All right, what P array could we reach for? We were inside of this imbalance right here, and then we have this order block here. Okay, we have that order block here, and then also we have the breaker basically of this up move, which is up here. You see this down candle right here. All right, so I'm paying attention to these areas. When price comes into it, I'm looking for what price does, and I'm looking for my model. I mainly want to sell right here. I mean right here or right here. Okay, you could sell once price takes out these stops, but I want to sell here and here. Okay, for a risk to reward standpoint. All right, so when price came in, it really didn't do anything. It didn't do anything. It ran right through this. So what did I do? I looked back on a higher time frame to see what it was reaching for. It took out this high, okay, and it came into the open of this order block and almost mean threshold of this 4-hour order block. Okay, so when price came into there and it started reacting, all right, it started reacting. I looked on an hourly time frame, okay, and this is what I seen. I seen price create this up candle and this down move right here. Okay, so I know that this is an hourly order block, right? There's a reaction inside of here. All right, it's a reaction inside of this 4-hour up candle, right? I saw this reaction right here, this wick coming down right here. So what I did was, okay, now I just want to give you guys a little backstory. I did not trade, I did not put live funds into the market this week. Okay, I'm done trading for December. All right, but I'm always training myself, I'm always studying, and I'm always paper trading, you know what I mean? Just so I can stay fresh for when I do get back in. You know, I never missed a beat. I just don't want to put live funds in this month of December because I haven't been liking the market conditions. All right, so I didn't take these trades, but I did. Okay, if that makes sense. No live funds. All right, so with that being said, right, we see price came up, right? You see how we took out these highs right here, these little bit of highs, and then we broke down and we took out this low. Okay, that was enough for me. That's a sign for me to see what price is doing. Okay, so when we have this reaction, this is a Dylan. Remember what I said, when we take out highs and then we take out sell side liquidity afterwards, we have a Dylan range to work within. All right, this is our range of opportunity to possibly sell. All right, so when we see that, when I see that there, okay, and I see this reaction, I'm asking myself, where's price at? Okay, we reacted off of this daily order block, this premium. Okay, and what is price reaching for? So after it completes this objective, I'm looking for what price is reaching for. Okay, dismiss all this price action that happened here. We have this BISI right here, and we have this low here. So I know that this will be my next objective to get into, to possibly buy back up. Okay, we also have these lows here that we could possibly get into after we clear this out right here and aggressively get through this. Okay, you want to see price aggressively get through this, because this would be kind of like a balanced price range. All right, so you want to see bodies close below this balanced price range. All right, but we have this low here, and we could possibly get some reactions once we come into here and to move back up. All right, so let's look at the daily real quick so we can build a little bit more context for what it could reach for. Right, you have this low here. Okay, where did it come from when it was down here? It came from, it looks like a BISI. Yeah, it looks like a BISI. So you have from this high, not from this high, from this wicks low to this wicks high right here. This is a balance. This is a imbalance that price needs to rebalance. So we came into there and we rebalanced this right here, and then we moved back up off of this. All right, so we could come back down, maybe come into here and then move back up. So we just know that this is our least, our nearest drawn liquidity right here at this low. But we know we could get through here, and we know we could come down here swing wise. All right, so when we had that, right, we had that breakdown on the 15-minute, we know that our draw would be right here at this low. Right, that's our next draw. We know this low is potentially gonna be taken out if it's bearish, right? So this is your safe TP, right? But let's get into the trade. I'm sorry, I'm going too quick. All right, so we came up right here, we took out this low here. Let me mark it out so your eyes can see it a lot better. Took out this low. Okay, we took out these little bit of highs, ran up, and then we broke down. Okay, so what do we do? Where's price at? When price was down here, we're looking at where price is at, because this is when we start looking at this Dylan range. Okay, what is price? What would price reach for? Okay, we know that price would reach for down here. Okay, in that imbalance right down here, that imbalance that's inside of here. I think that I mark it out. Yeah, so this imbalance right here. Okay, so I'm not gonna mark it out, but that's what we're looking at. So we could put another horizontal line right here. All right, horizontal array. Okay, that area of imbalance inside of here, let's take this out here. Okay, so this is our imbalance, right? And long-term TP would be down here. So that's what price could be reaching back for. All right, that's my target, that's my objective. So when price is here, when price is right inside of here, now I'm looking for where are the stops. Okay, now you want to understand what price did once it came up into here and started moving on its way down. You see how they started reaccumulating here, orders right here, but it's not really, it didn't reaccumulate anywhere, right? It didn't really come up to an inefficiency and move down off of it. So what's the significant meaning for this area right here? What did it really do but besides reaccumulate? You know what I mean? After it already took out the highs here and the lows here, right? So now I'm looking at where would the stops be? Okay, the stops would be here. Okay, so whatever price does inside of here, I'm not really as focused on it. You know what I mean? I want to see it get ran. Now, understand that you will miss trades, okay? You're always going to miss trades no matter what strategy you have, okay? But this is the most high probable basically I wouldn't say strat because it depends on you, but this is the most probable to me when stops are ran out. Okay, so when I see that stops are here, okay, we have stops here, there's stops all inside of here, and then we broke down. So I'm looking for all this to be ran. Okay, now once price runs that, I want to see what we could reach into. So we have this FVG inside of here that we could look at, play inside of. We also have this order block that's at the highest premium. Okay, and the reason why I say you're gonna miss trades is because when price is trying to get somewhere, it's not really gonna come to, you know what I'm saying, rebalance everything and come to mitigate the highest premium. All right, but for a risk to reward standpoint, these are the best trades, you know what I mean? And probability, you know, it's the best trades because you're waiting for people to be taken out. All right, you're waiting for people to get liquidated, you're looking for it to mitigate, and then, you feel me, continue to this objective. So with that being said, right, I'm looking for this to be ran out. Okay, and what you could do is put a sell limit. Now sometimes what I do is, out of my trading plan, I will risk low half right here, and then I'll wait for what price does, and then I'll look to get in. All right, so this could have been your first entry here at the what is it, basically the unprotected low, right? And then here, right, this is your safe TP right here, that's already at a 1 to 5, and this would be your objective, which would be like almost at a 1 to 10. Okay, if you got up here, all right, if you took the trade here. Now let's say you wanted to wait to see what price did because you don't really trust this high as much. Okay, it could have another run up. Okay, it can have another run up. Let's wait and see what price does. Right now, when you're looking at this reaction in this time frame, right, let's go to the 5 minute on how you could have caught that. All right, and this is exactly what I do right here. This is how I have been getting withdrawals with FTMO. This is how I passed my funded talent. But you feel me, you already know what happened with funded talent, and you almost got a withdrawal with funded talent, made 10% on funded talent but never got paid out. All right, this is how I passed my first phase of my Forex funds, you know what I'm saying, from my second funded account. All right, so you know what I mean, this is what I do. All right, so when you see price reacted here, okay, it started breaking down. All right, so this is what the other model that I was talking about here. So I want to scale into a smaller time frame to see what price does once it takes out that liquidity, right? Okay, letting this load a little bit. So when price came into this area, okay, this is what you can see. This is what you can see right now. All right, we had price run up, right, break down, right? We see that we came up right here. You want to know what every move kind of did, you know what I mean, to understand where's really the stops at. Okay, we came up here, right, rebalanced all of this, broke down, right, and we broke back up. But as you can see, this was an area of the bullish order block, right? This is where sell orders were. They came into here, bought back up, and then they broke down right here. So when I saw this, this is where I took a trade once price pulled back inside of here. Okay, once price pulled back inside of here, put the stops right above to be safe. I'll put it above here, this high, just in case it wants to wick up a little bit. Your protected stops would be above this high, right? But this is how I enter this. Okay, and then what's the target? The week low. Okay, that's automatically a 1 to 5, 1 to 4, 1 to 4ish. And then if you aim for the objective, right, take partials, this is almost a 1 to 9. All right, 1 to 9. So we have that here, right? If you scaled in half a percent here, right? I would scale in the rest right here. All right. So that's how I would go about that one right there. So you can see price broke down, right? And then when you see this, okay, here's a little nugget. All right. When you have a market maker sell model or buy model, they reaccumulate, they redistribute where they reaccumulate that. Where they they redistribute where they reaccumulated at, and then on the opposite side, when we're coming down, wherever they reaccumulated at. So let's say price is moving up, and you see some reaccumulation, and then they move up, and then reaccumulation, right? When price breaks down, it comes to reaccumulate inside of areas that they already, they redistribute inside of areas where they already previously reaccumulated at. Okay. So that's what they do in market maker sell models. So here's something right here as well. Okay, here's a little nugget. Here's some heat right here. You see this right here, okay? End of consolidation, reaccumulation, smart money reversal, low risk sell, breakdown. What's this right here? This is inducement. Low? No, this is not inducement. They're redistributing, okay? You have to understand. I'm going to wait for it to come up here, okay? If that's in your plan, fine. You know what I mean? But when you see this right here and they're reaccumulating inside of this right here, you see them working this area, that's a potential sell right there. So I'm going to give you guys something that I usually do. Whenever I see this, they're working inside of the area, okay? I put my stops above an area where they shouldn't really come back into, and at least search for a 1 to 2. Right? At least by the end of consolidation. This is how I make a little quick money, you know what I'm saying? To pay some shit off. You know what I'm saying? Like, this is quick. You know what I mean? This is what I do right here. So I have my first entry, and then I re-enter here 0.5%, low percent, right? Just to make some quick money off of what they're doing inside of here. If smart money is redistributing here, I want to get some orders too. You know what I'm saying? I want to get in the move. You know what I mean? So this is another way that you could get into another trade. This is how you could re-enter, you know what I mean? Scale in, basically. All right. So when price broke down, right, we got to our objective. All right. So now we have a new range. All right. We took out liquidity here. We broke down. We took out the stops here. Now, what a lot of people do, I'm gonna give you guys, here's another tip, okay? Make sure I'll give you guys some sauce, all right? All right, so write this down. Really take note. Rewatch this video over and over. When price takes out this high and breaks down, this is your new range. Now, what's our objective still? What's our objective? Our objective is to get back to this low, and also to get down into and work this possible price range to maybe we could get in here and then we start buying back up. All right. If you're a swing trader, you aim for this low, but we know that we want to get in here and this low right here. So when we have that, right, okay, and price breaks down, this is still our objective, right? We haven't completed it yet, so I'm not really looking to buy like that unless price, you know, shows me something different otherwise, but I'm still weary. All right. So once I have this low right here in mind, I'm watching this, right? This is still my objective. All right, I have this range high to this range low. Now remember when I said that when price is trying to get somewhere, when price is trying to get to his next draw, his next objective, it's not gonna come and mitigate all the way up here. Okay, write this down. It's not gonna come and do that. This is low resistance liquidity now. If you do get a sell right here, okay, good job. But guess what? Most likely, if it comes all the way back up here, it's not really that bearish. All right, you go to my journal, you see my EU trade that I took before I stopped trading for the rest of the week. All right, I cut it at break even because like price came all the way up here. It's no reason for me to hold that. You know what I mean? Because it's not as bearish. You know what I'm saying? I'm not looking to trade it anymore. So remember that. So with that in mind, guess what my idea is? Okay, I know that this is my range. I know that price really shouldn't come back and work all this. Yeah, you have something right here, you have something right here, you have, where's the stops? All right, okay, we have stops all around here, but I know I don't want to see price come all the way up here. So guess what I work with? All right, look, we have a mitigation block here. Okay, remember that PD array matrix that I was talking about? Mitigation block. Okay, it's not a breaker. I mean, it could be a breaker because it took out stops right here. But from this move high to this swing low to this move back up, this is your mitigation block. So mark that out. Okay, this is your mitigation block. Here, we broke down, we came back up. What are we coming back into? Let's see. This is how I get my refinements. All right, inside of this mitigation block, you see that there is a up candle inside of here that came up into this range right here. Okay, yeah, it could be inducement. Okay, fine. You know what I mean? But this is what I'm focused on right here, this up candle here. All right. So I have that there. I have this up candle. Let's kind of make sure we get the exact wick of it. If you go to the 15-minute, it might look like a whole, it might look like something like this. Yeah, because this is how I saw it. This is how I saw it before. I marked out this whole 15-minute candle here. Okay, that's what I did. And then I went to the 5-minute and saw this right here, but I didn't want to over refine. Hold on, let me go back to it. I didn't want to over refine once price came into this area, but you know it could sell off from here. Okay, so I'm gonna show you guys something. All right, now we came into this right here. Okay, we came into this right here, this mitigation block. Also, before we get into that, I'm sorry, I missed something that I wanted to talk about. When price broke this up candle right here and came down, I know that I do not want to see price close above this up candle. So remember, your safe stops is right here because this is a fresh order block. When price came down, wigged down, and came back up, right, I entered and put my stops at least like halfway. You really don't want to see price close above. If you are going to put your stops up here to be safe, you really don't want to see price close above this candle. It can come and wick back up into there and then break down, but that's all you want to see. You know what I mean? That's all you want to see when you have a bearish order block that's freshly created. You have 3 candles, a fractal that come. You don't want to see this high get closed above. So once you see that, you can start mitigating risk. That's something I did want to say right there. So when we came into this, right, we have this up candle come in, right? It was a down move, and then we have this engulfing. All right, so now I'm paying attention to this area once price came into that. All right, so let's go to it real quick. All right, so when you look at this, you see price right here. Okay, it took out stops, it broke down. This is my new range. Where's the liquidity, right? What did each leg do? Okay, we see that it came down here. Okay, came back into this bullish, this area, this demand, basically bullish, this bullish order block, right? Went up and then broke down. So this area is what I'm looking at right here. I see before they came into here, they built up liquidity here. So when price ran up here, this was another sell that I took right here. Okay, stops above. This is your this would be like a re-entry to get back to where your draw is. What your draw is, which is could be this low, and then anything lower. All right, now as you can see, stops is ran. Okay, you feel me? You're gonna lose some trades, you know what I mean? But when I say a higher strike rate, right, you have a higher strike rate than usual. And what you usually have, it's all dependent on the person and what context they build, right, and what you wait for. Okay, but this will give you, what I'm giving you guys is a context and what I look for to have a higher strike rate. All right, so when you have high risk to rewards, all you need is a 40%. All you got to do is really just be half right. And even if you're not half right, you should still be profitable. Even if you win 3 out of 10 trades, you win 3, you should still be profitable if you're taking high risk to reward trades like this. Okay, what I do now is I literally just TP at a 1 to 2 and 1 to 3, and then take partials there, and then I take majority out. You know what I'm saying? That's what I usually do now. You know what I'm saying? But this is what I used to do right here. Okay, And this is how I passed my challenges, you know what I mean? But after I started trading a while, I started getting a higher strike rate just by just taking my profits at a 1 to 3, 1 to 2. You know what I'm saying? Because when you hold it a lot longer, it's a lot more chance that you could get knocked out at break even. You know what I'm saying? And it'll just be a break even trade. All right. And you not get your profit. So that's what I've been doing. Okay. But this is the same entries that I'm getting. I'm just maneuvering my stop loss a lot tighter, you know what I'm saying? Instead of you know, making them too conservative. Okay. So back to this. This was a loss. Oh well, you're gonna lose. Okay. Take a coin, flip it, heads. That's your RR, and then tails is a loss. Okay. Every time you flip it, it's a trade. All right. If you do 20 trades in a month, go ahead and go flip that coin. It's something that you guys can do to do psychology. I don't care. After I enter this trade, I really don't care what happens. I don't. Even if I win, I don't care. I'm not excited. I'm not that excited. You know what I mean? If I lose, oh, okay. You know what I'm saying? My mind isn't in this trade. Like, my emotions isn't in this trade. When I'm taking this up here, it's not in this trade anymore. Take the trade, leave it, have risk parameters, right? When price does a certain thing, and then you come back and you manage your risk once price does something. But I'm not in this trade. I know I'm gonna lose, right? Know that you're gonna lose. These people that's on IG or Telegram that you're following, you constantly see them getting high risk rewards, one to 90s and all of that, bro. Don't care. You don't care about that, right? You gotta focus on you. Okay, you think you gotta live up to what they're doing? No, you see them winning all the time. They're not showing you their losses. All right, and a lot of them, I'm gonna tell you right now, a lot of them, they'll get into their little demo account, right? Their little demo account, and they spam that buy and sell button when price reaches a certain area. Okay, that they think is gonna reverse. They spam that sell button, that buy and sell button, and whichever one works out, they take that one, delete all the other ones, and then maneuver their stops. They maneuver their stops to where it's tight, to where it looks like they got like a 1 pip stop loss in there. You feel me? With their risk reward. They don't show you their losses. They don't give you any psychology behind what's going on. You know what I mean? They don't give you that because they want you to buy into what they're doing. All right, whatever they're selling, they want you to buy in. All right, they want to feel like they're you feel me? They want to feel good by you seeing that, and you be like, oh my god, you just got a 1 to 200. Oh my god. Like, no, bro. Like, don't focus on them. You have to focus on you. All right. So if you see those type of people just spamming their trading view charts, right, with their high risk rewards and their pip stop losses, not showing you no live trades, they're not giving you no psychology, bro, run away. You feel me? Or test them. Be like, yo, you know what I'm saying? Like, I see you doing this and that. You feel me? You want to see if they're actually legit? Have them do live trades. Do a live session. You know what I mean? Them getting those highest risk rewards. Let's see what they really do. You know what I mean? If it seems too off, then boom. Sorry for ranting, but I'm just saying. I'm telling you guys, it's not good for you. All right, stay away from these people. All right. So, with that being said, it's okay. You're gonna lose trades. All right. We're not perfect. You're a trader. All right. Profitable traders lose. Okay, so be a profitable trader. Don't think you gotta be perfect. All right. So with that being said, now I'm not. Hold on. Before I finish. All right. I'm not saying you can't get 90R and there's no limitations. All right. But I just want you guys to really stay away from people that's not gonna do anything good for you, right? Because they're not doing anything good for you by showing this and not really, you know, being transparent with you, not showing their losses, not giving you psychology. Okay, that's it. I'm not saying you can't do that. Okay, you could do that. It's no limitations. It's no ceilings. All right, but just be aware. So price came up, took out this high, right? That was an L. All right, and then we came into, remember that 5-minute order block. That 5-minute order block that it came back into, actually the open. So when it took out this high, okay, fine. That's okay. You know what I mean? That's okay. I know that's gonna happen, right? We know that's gonna happen, but we adapt. You know what I mean? Now say you already took your trades for the day. You don't have to take this one. There's always going to be opportunity. All right. You don't have to, you already scaled in here. You already scaled in here. But say you missed these. Okay, fine. You messed up this trade. You got one more trade left. All right. Whatever's in your plan. All right. So when price came into this 5-minute order block, okay, let's see what happened. Okay. We took out stops here. Okay. Took out stops here. We broke down, right? Up here, we came back in, broke down. We have a little bit of fair value gap inside of here that price could come back into, right? But we also see that price, this is our area right here of demand. This is where sellers were. They're coming in to sell, sellers right here. So they sold to buy here. They're coming back to work inside of this area, and they bought back up right here. So you see this right here. This is a hidden base. This is a hidden order block. You go to a seconds time frame, you'll be able to see that this is a hidden order block right inside of here. Oh, it's kind of laggy. Hold on. Give me 1 second. All right, we back with it. My bad, guys. My trading view always starts to lag. Even when I'm not recording, it just starts lagging out of nowhere. It's so weird. Trading view's been weird. But like I was saying, okay, we came back into this area here. All right, this 5-minute order block. We broke down. Remember, we have that area of demand that they're working inside of, right? Where they have sell orders resting, where they sold to buy and they came back in to work inside of it. So let's go back to it real quick. Okay. Okay, so right here, okay, they created this hidden base, which is an order block on a smaller time frame. Yes, this can be inducement, guys. This can be taken out. All right, but you don't. It depends on you. Like I said, you can put your stop up here if you want to. You're used to doing that. That's fine. Protected stops would be above here, right? But we know this could be an entry, and we know it could be an entry up here. But I'm looking at this, right? Even though we didn't break structure, yet. All right, but I could see that we came into, look how we came back into it, and then we went up here. So I know this is an area to work in right here. So your sell can be right here inside of this hidden base after they took out this low and this low here, because this is where liquidity is resting. High here, liquidity here. Taken out. We didn't take out this low, but it's fine. We have context. We know our objective, right? You know your objective. They're going to take out sell side liquidity and reach sell objectives more than they're going to come to buy side objectives. All right. So that's your entry right there. And then your stops can be up here, safe up here above this high if you want to. And then target would be here. Okay, who's to say in 1 to 3 isn't a high risk reward? It is. You feel me? Anything above a 1 to 3 is a high risk reward, but you could wait until price gets down into your objective right here. That's a 1 to 5. All right, you want to go lower to inside of this imbalance. There you go, 1 to 7, 1 to 8. Okay, right here. So that's a sell there. All right, that's another sell. Lost this one. Won this one right here. Won this one. Okay, this is just a little nugget that I'm giving you. This isn't a part of the model that I'm giving you, but this is something that you can look for. All right, I'm not saying spam anything. Remember, I'm not a financial advisor. Don't just put in Lambo lots right here because you see they're reaccumulating inside of here. But I'm saying this is a significant area, and you see this. That's the significance to it. You could sell. You could be a seller. All right. So we broke down here, right? Took out this low here. Okay, now we have a new range, guys. We have a new range. All right, we have from this high to this low. Now we came into the imbalance. All right, we reached an objective. We came down to our objective, and that's all she wrote, right? That's all she wrote. Now we came back up here. Okay, now if we're gonna continue bullish, I know that we're gonna break above this order block, this bearish order block right here. Okay, and potentially aim for these because we already completed our objective, right? Now, that doesn't mean that we still can't be sellers. Even though we complete our objective, we're just waiting to see what price does. We're waiting on that data, all right? So we can see that we have an area inside of here. Let's go ahead and move these over here. Okay, let's move these here, all right? And we can see that we have this up candle before the down move, all right? So we're looking inside of this area here, this order block. So let's clear this out. Let's clear this out. clean up the chart a little bit, and we could see that price came back into this array. We came back into this array here. Okay, the open of this up candle. Yeah, the open of that up candle right here, and then we came back inside of it. So now that we have that, right, we had a reaction. Okay, you don't have to put a sell limit. Remember, guys, you don't have to do that. We had a reaction, created a fresh order block right here. This is what we're gonna frame our trade in. All right, let's go to a lower time frame. Okay. Oh, one more thing. Look at this. Okay, Angela, from this high to this low, why not this order block? Yeah, you can work inside that order, but remember, where are the stops? Okay, there's no stops resting inside of here on this with this move up, right? What's the significance of this move up here? We came down, we took out this low. Wow, we moved back up. Did it come back into this order block here? No, it really didn't. What's the reason for this move right here? So whenever there's no really significant reason of a move, if it didn't come into, like, say it did like come into here, right? And then you see that price came in and then it broke back up and created like a proportion block, which is an up candle that's moving back inside of another up candle, and then broke down, then yeah, you could sell from right there, right? Or when it breaks down and come back, it's a potential that it's not going to run that high. But I'm thinking of, you think of liquidity first. Okay, where are the stops first, right? This is my stop first. I'm thinking of that first. There's no reason for this high. So we run that out. We came into here. We broke down. Oh, wow. We got our reaction. We didn't have to take no sell limit. Okay. We didn't have to. We already completed the objective. I'm not going to put my money until I have some more confirmation on my money in the market. Until I have more confirmation, right? All right. We don't want to gamble. Okay. Look, remember, buy side ran. Sell side taken out. What's our objective? Look at all these lows being built up here. Okay, this high created this low resistance liquidity run potentially, right? We came back up. Okay, we have, where's the stops inside of this range? So from the top here to the low here, where's the stops? All of this right here, all of this. Where's the liquidity? FEG. You can enter inside of this FEG. Okay, it came up a little bit higher, right inside of above this, and that's fine. But you can enter here, right by the order block, inside of FEG, maybe consequent encroachment, stops above this high, and then your target, where? Down here, 1 to 4, 1, 2, 4. All right, so you can aim for that down here. And then maybe to completely fill in that SIBI. But remember, this is our objective was completed. So we have a reaction here. We could possibly sell some more. This is our next objective, because we could take out this low and then buy back up, because we're still inside of this SIBI. I mean, this BISI. Sorry, the fair value gap, the imbalance. Okay. Now what did we do? We chopped around. We messed around. It was about the end of we were close to the close of the market. Okay, so you probably wouldn't have wanted to been in this trade anymore. You would have got a 1 to 2, maybe partial majority of position, and then put the rest to break even. So you feel me? I didn't take this trade. This is just I'm showing you guys a basically hindsight-ish right here. All right, but it's the same model. These right here, I saw these happening. All this, I saw this, all that happening. All right, this I took a loss right here, win right here. Okay, but here I didn't take this trade. All right, so the concept though, right? We have this mark down right here, this move down. Where are the stops now? Okay, we have a new range created. Where are the stops? Okay, we came down right here, and we moved up from right here. All right, but what's the significance of this move right here? Really? You know what I'm saying? Once we broke down, I'm thinking of liquidity first. Liquidity first, guys. All right. Stops above here. In the market closed, I'm really not looking at none of this. All right. We look at all of this that got built up here. Okay. All of this that got built up here. This is my liquidity. Asian range, right? inside of this wick right here is a order block. Remember that on the 1 minute, it's an order block right inside of this wick. And you can even work with this order block still. This is my liquidity. Okay, price ran this high around London session, London open. Okay, we completed objective. Now you got to be a little bit, careful, because we came up and then we broke down, but we failed to take out this low. So all of this right here could just be liquidity to be ran. All right, but since you see there's liquidity right here and there's a PD array resting right above it, it's validated right here. And our objective, which can be the close of all of this, because I'm still bearish, I'm not bullish yet. Even though we completed this objective, it hasn't shown me any type of market shift, any delivery, any shift in delivery. All right, make sure I'm still recording. All right, so we came back into take out this high, and then what did we do? We have this big rejection right here, creating this up candle right here. All right, if we scale down to a lower time frame, but just look how the delivery looks. All right, it looks too choppy right here. And then create no bulky up candle. It didn't do none of that. So this area is kind of iffy to me. All right, but let's say you saw this, okay, and this is what you're working with. High to this low, took out this high, we took out liquidity at this low. Where's our stops? Above this high right here. This wick is our stops. Boom, took out the high, stop hunt, break of structure, took out liquidity here, sell side liquidity, worked this range. We worked buyers and we worked sellers here, came back above. This is your buy side liquidity. Where's the area that you get in? You could get in right above this candle if you want to, or you could wait for the premium at this order block right here. All right, okay, let's say you wanted to wait on the reaction. It happened right here. You get back in on this freshly made order block, and you could have entered here and then put your stops right above this right here. If including spread, you probably would have moved it up like that, and then your target would have been safe target would have been here. But from this high, right, liquidity being ran here to the low resistance liquidity down here, you could have target 1 to 5 to this liquidity down here would have been like a 1 to 9. All right, but guess what? You got stopped out. Oh well, you know what I mean? Oh well, you got stopped out. That's fine. But what did price do? What did price do? Okay, we came up, took out this high, and we broke down, creating a fresh order block right here. Now remember, I probably wouldn't have taken this right here because of how choppy it looked. Go to a higher time frame and look how choppy it looks. If it's too choppy and you don't see no bulky up candle being created or a down candle being created, kind of stay away from it a little bit, or lower your risk. Okay, so that's a nugget right there. It's not improbable when you see right here that we came up and we broke down, but you go up to a little higher time frame, and this whole thing looks how choppy it is. Right, we created this fractal right here and we broke down. This up candle right here isn't as significant. I don't think it's gonna hold like that. It's not that strong to me. Okay, I don't see this as a fresh order block right now. It is, but you feel me? I don't see it as like that. And then we closed above. Look, we closed above this high right here with this. Okay, you don't want to see it close above. Remember, so once it closed above, really don't want to see no sell here. Look for that to be ran out. There's a nugget, guys. Yo, I just gave you guys a nugget. All right, write that down right there. Whatever I just said, rewind it. Write that down. All right. So you see that price ran up. We created an up candle right here. Okay, broke down. What did we do right here? We came into this right here, this array. Okay, now if you want to go with probabilities, right, you want to wait for this to get broken right here. But you see we broke up, came down, You can wait for this to be broken as well, because this is the last low that created this high. But fractally, this is a break of structure. If you're bearish, this is a break of structure, minor. Okay, this is a higher break of structure, major, more major relative to this 1 minute. I mean, no, actually, this would be major, right? But it's all fractal, right? You go to a smaller time frame, these are breaks of structures right here on smaller time frames. Once that gets taken out, once we have this little up move right here that got created, this is a hidden order block. Okay, let me move this out the way. Okay, stops were ran, right? That's our objective. Where's price at? What is it reaching for? Possibly down here. Okay, where are the stops? It's really we came back into this order block right here. There was a significance from this move to when it came into this area of demand right here from this down candle. Came into that, we moved up. Significance to that because we worked this bullish bearish order block right here, freshly made, right? You see this fractal? You do not want to see price close above this candle right here and even this order block. All right, so you can see price came back in. This could have been an entry here. All right, you could have put it right as it broke down this move right here. So once it came back into it, that's your entry. Okay, stops above, protect that high if you want to be safe. This order block, and then target, save target right here, 1 to 3. Okay, to this low. But if you want to reach for the weak lows, which was created by these highs right here, we ran out this liquidity. What's next to be targeted? This right here. So you can aim for this instead. Okay, I would aim for this low first. All right, 1 to 7. You could don't always expect your liquidity to be completely taken out before it reverse on you. All right, you want to aim at the lows, the rejection blocks of this whole consolidation range. All right, so you can see that would have been a clean 1 to 7 just from this move. You lost here, fine, that's 1%. Keep your psychology right. Do the same model. Do your same model. Focus on that one model. All right, and do that same model. That's your edge. Have context. Get into your use your model, right, when you're at high probable areas, when stops are taken. That's high probable. All right, stops are taken, right? We took out stops here. We broke down, created this fresh order block, came into this area of demand with this down candle. Let me move this out the way, bro. Came into this area of demand where they sold to buy, came back, worked into this area, created a hidden base of lower time frame order block, came back up, worked inside of this order block right here, and then once we broke this, you could be a seller, right? That's confirmation to get in right there. Stops above. You don't want to see it close above this high. It could wick above here and then break down. All right, you don't want to see it close above there. All right, even if it closes above this high, this area right here, you can start managing your risk. It depends on your trading plan. All right, everybody's different, but this is a foundation to work with. Boom, look, targets hit. All right, targets are hit. Hope you guys are enjoying this video so far, and maybe you guys are getting a paradigm shift or something. But yeah, you can see that we worked down, broke down, boom. That's simple. Now I'm gonna go over something right here. All right, and this is the last thing I want to talk about right here. So look at this, one trade, re-entry. Hey, you guys can count all the risk to reward, the percentage that you would have possibly made if you would have took these, right? Okay, so out of all of these, lost to won all of these. Okay, understand your edge. Now right here, this is what I'm looking at. Okay, I know that I'm working inside of this low to this high, right? We're at a discount once we come down inside of this this range right here. After we fill this SIBI, I want to see what's inside of here, because we have these up candles here, right? We broke down and then we broke up breakup structure. Okay, So down here can be areas to buy at, and I'm really focused in. I don't want to see it really come back down here. It can, that's fine. Might be some buys inside of here, which you can see that it didn't give you your model or whatever model. It didn't give me my model inside of here, but I'm looking in here, right? And when I'm looking in here, right, I'm finding institutional confluence. So you can see that this is still a area of imbalance that it came inside of. You see this down candle right here. I'm just scaling down, right, trying to find an order block inside of this area, right? And so let's go to the 1 minute real quick. I want to show you guys this trade that I took here, but it didn't work out and I closed it around break even. All right, so you can see inside of that imbalance, there's an order block right inside of here. Okay, you see these consecutive down moves, this little reaccumulation. All right, I'm looking at this range here. Draw that out in time. This is what I'm working with. Let's go. Move it over. Move it over. Okay, I know that I'm in an area of discount. I know that I'm in an area of discount. Let me go to higher time frame to drag this out. Don't want you guys to fall asleep on me. I know this video is pretty long. All right, so we came into there and you can see that when we came into there, we got a little small reaction. I'm looking at the 1 minute to see what price is doing in here because I know it's a potential buy, but I'm looking for a shift on delivery. All right, we came out, we ran these low here, right? And then we started to break above right here. All right, now once we did that here, we came and worked inside of this bearish order block, came down, worked back inside of this bullish order block. So once this break, I'm thinking that it's about to shift. I'm thinking it's some you could be more patient and just wait for this to break and then possibly start getting in. But when I have a lot of context, I don't really wait for structure breaks like that. Okay. All right. So it really depends on you. But right here, it came up into this up candle, broke down, and then once it moved back up above this area, I'm looking at this as a supply and demand flip. Okay. Right here. Okay, so I was looking for price to come back inside of here, and then once it did that, I think I looked at the 3 minute or 5 minute to kind of like see the candle a little bit better. So you see how the 3 minute made this down candle right here. So I was looking inside of here. Once it broke and it came back inside of here, I just entered here with my stops just below, just like that. It wasn't below the protected low down here. Yeah, it was like something like that on the rejection right here. So when price came back up and it started to play around, remember what, like I said, when you get in with price, as soon as you get in, you want to see price move. All right, so once we broke above this up candle right here, all right, and we started wicking around, playing around right inside of here, I just closed it. I closed it, and it would have been a losing trade. You know what I mean? So you want to close things. You don't want to see delivery like this. You want to see price. After you get in, it should move. After stops are taken, it should start moving, right? Up, down candles should start being respected. So even if it broke, even if you didn't close right here and it broke down and then it took out this low right here and then it started moving back up and then it started coming back down, you could have got out even more and then took out your position. Now, if you just want to let the trade play out, depending on your psychology and your plan, just let it play out, then that's cool too, because you're getting really good risk to rewards, right? Like I said, take a coin, flip it. Each flip is a trade. Heads, you feel me? That's 4R, whatever your risk to reward is. Tails is a loss, right? And then count how much RR you would have made. Now you might be saying like, yo, low, that's unrealistic. You feel me? That seems unrealistic to just flip a coin and base it off of trades. Really, you know, if you think about it, that's all the market. That's all we're doing. We're either long or we're either short. We're either gonna win from a long or a short, or lose from a long or short. You know what I mean? And then you have some break-even trades. So you could throw on some break-evens in there too. Out of 20 trades, right? Flip a coin, count some as break-even, right? Whatever. Say you're on your fifth flip. Okay, I'm gonna count this one as break-even. So whatever that is, it doesn't matter. All right, you could do that. Say you still think that's unrealistic. Okay, take 2 coins. Let's make the probability of losing a lot higher. Okay, take 2 coins and then take and then every time say your heads, right? Say your heads, and if you win, that's your RR, and it tells you lose. If one lands on tails, right? One coin, if it lands on tails, it's automatically a loss. So that means you have to get 2 heads to be a winner, right? And then count your RR. Count those. However many flips you do, that's your trades, okay? And then whatever trades you take, say in your trading plan, you take 12 trades a month, 20 trades, you flip it 20 times, those 2 coins, right? And you should still be profitable. So I hope this video was enjoyable and you guys learned something new, and this was good on your psychology too, and you know what I'm saying? And this might help your plan. I hope this helps your plan. You know what I'm saying? So make sure you guys go and back test, okay? This is not gonna work for you unless you actually study this and back test it and see how it works with you. Because you might, the thing is, right, the way that I work with this, okay, I see things different. I can see things differently than how you're gonna see it, all right? And I'm gonna do things a little differently based off of the foundation that I have right here that I just gave you, right? It's just a foundation from my plan, what I do, right? This is what I do, but it's a foundation for you. So when you do it, you're gonna see things, you're gonna have aha moments based off of what you see, right? Based off of what you're doing. You might see something differently that works for you based off of this same foundation. You might see something differently. You know what I'm saying? That's might not work for me. You know what I'm saying? So you have to back test it. You have to actually see it. Don't just go and start putting Lambo lots. Go taking FTMO challenges after you see a few of these work, right? You do it for a month, 2 months. Study it. Take your time. There's a lot of people that's just buying up these FTMO. Listen, I did it. Buy up FTMO challenges. Buy up funded talent challenges, and well, not funded talent because I didn't do that. It was the FTMO challenges that I blew when I first started. But just buying it up, knowing that I'm not profitable. Don't do that. Don't stop wasting your money. Go on demo. Make sure that you can consistently for 3 months be either break even or at least get 10% profitable at least. Okay. On demo, the same amount that you would do if you would took a funded challenge, right? If it's a 50K challenge, 100K challenge that you want to take, get a 50K demo account. Okay, see what you do. Don't, because you have one good week, don't mean, okay, I'm about to get this challenge, I want to make money. Don't do that, bruh. I'm telling you, there's so many people, everybody that I know did that shit. You know what I'm saying? Everybody that I still know people that's still doing it. And I know you might not listen, and that's okay, but I'm telling you, you're gonna blow money. Study this, back test it. You know what I mean? You're gonna have your own aha moments. Focus on one model. Now, stop hunt, breaker structure, return to order block. It might not be your model. It might be a breaker. Okay. So if this is not working for you, then try a breaker. But don't try to do multiple things that you learn. You know what I'm saying? Like ICT, he has breakers. He have all types of concepts. All right. You don't want to do every single one, every single thing that you learn from ICT. You don't want to try to do. You want to take some things, one or two things, that's it. Make your trading plan simple to where you can duplicate it. You get what I'm saying? And then take your emotions out the market. Let everything play out. It's all going to work out. It's all going to be fine. You're going to be proud. If I could do it, you could do it. There's other people that could do it. You can do it, right? So I don't mean to ramble on, but you know what I'm saying? I'm very passionate about this, and I want you guys to be winners. You feel me? I'm not selling nothing. I'm not, you know what I'm saying? I'm not trying to do none of that. I'm just trying to help. I want to help one person that I can a day, if I can. You know what I'm saying? That's just me. So I hope you guys enjoyed this video. I'm not gonna keep rambling on too much, and I hope you guys enjoy your holiday. If you enjoyed this video, go ahead and smash that like button. If you haven't yet, go ahead, do it right now. And if you want to share, go ahead and share, and I'll see you guys in the next one. Peace.